Good morning to all the esteemed participants from Singapore. This is Prem representing NRI Services of Ashutosh Financial Services Private Limited. Heartily welcome to our Zoom webinar, which will be focusing on investment opportunities in New Age India for NRIs. It's a pleasure to have you all join us as we explore into this significant topic that holds immense potential for mutual growth and prosperity for the NRIs around the globe. This is our first event in the entire series of financial awareness webinar exclusively planned for Singapore webinar NRIs. Singapore stands as a beacon of innovation and progress, while India offers a vast array of investment opportunities across various sectors. Today, we gather to explore how NRIs in Singapore can leverage their opportunities to contribute to India's growth story and enhance their own financial portfolios. Our, our esteemed speakers for today's webinar, Mr. Daxesh Kothari, who is a tax and financial consultant and MD and CEO of Ashutosh Financial Services Private Limited, along with CACFP, Mr. Rajit Kothari, who is an executive director of Ashutosh Financial Services Private Limited. With their expertise and experience, they will provide invaluable insights on the various options available for investments, where NRIs can invest their valuable savings profitably in India. As we engage in discussion and interactive session, I encourage active participation by answering the polls which will be asked during the session, posting your queries in the chat box, and also add question as a session at the end of the webinar. Let's seize this opportunity to not only explore investment avenues but also to strengthen the bond between the NRI community in Singapore and India. We will start with the short introductory videos of today's speaker and then we'll continue with the core presentation. Thank you for your presence and enthusiasm for exploring investment opportunities in India. Together, let's embark on this journey to unlock the potential for growth and prosperity through the series of events planned by us. Thank you.
Mr. Daxesh Kothari is a tax and financial consultant and the Managing Director and CEO of Ashutosh Financial Services Private Limited, which is an ISO 9001-2015 certified company with prominent presence in the field of financial services. He specializes in the fields of income tax, FEMA, trust laws, estate planning, and foreign tax compliances. On the financial front, he specializes in investment services and insurance services. He advises companies, trusts, high net worth individuals, and non-resident Indians across the globe on financial and tax and allied laws related matters. He is a trustee of various charitable trusts. He has been involved with a number of social service projects of Rotary Club and is a Paul Harris Fellow of Rotary International. He has been presenting analysis on the Union Budget since last 16 years and also on various subjects of taxation and finance at various forums addressing doctors, businessmen, industrialists, taxation consultants, chartered accountants, company secretaries, NRI and postgraduate students of diverse branches on subjects related to finance, taxation and estate planning to make our society financially literate. His articles on financial subjects are regularly published in renowned newspapers like the Economic Times, Mint, etc. and also in magazines like Dalal Street. His interview was aired on ET Now as a mutual fund industry expert in the program named Swatantra, which is one of the most acclaimed investor education initiative of our country. He has also addressed a program dedicated to NRI on a leading Gujarati TV channel in Ahmedabad. He is a 360-degree versatile personality in the fields of taxation and finance, which makes him a unique and truly a one-stop solution provider for a wide range of financial and tax-related matters. Mr. Rajit Kothari is the Executive Director of Ashutosh Financial Services Private Limited, which is an ISO 9001-2015 certified company with prominent presence in the field of financial services. He is a chartered accountant and a certified financial planner by qualification. Further, he has graduated in the field of commerce with specialization in banking, financial services and insurance sector from Ahmedabad University and has also pursued post-graduation in the field of law. He started his journey with Ashutosh Financial Services Private Limited, where he played an instrumental role in functioning of several business development activities of the company. He also played a vital responsibility in the development of exotic product offerings for the company in the alternate investment arena such as foreign equity and unlisted stocks. Moreover, he was instrumental in the preparation of extensive knowledge database on different topics concerning taxation and finance for the company. Thereafter, he worked with Messrs. Deloitte Haskins and Sells LLP, one of the leading global consulting firms at Mumbai, focusing on tax and regulatory compliance for high net worth resident and non-resident individuals. He is an expressive public speaker and addresses professional forums on diverse topics related to finance as well as other topics of national importance. He has participated in international exchange program as a student and has also attended management development programs across top business schools in India. As a young and dynamic director with a multi-skilled personality, he presently concentrates on exploring innovative business opportunities through geographical expansion, digital proliferation, and concentric diversification of the company.
Hello, good morning, everybody. A warm welcome to the series of financial awareness webinars exclusively designed for Singapore non-resident Indians. The topic today, investment opportunities in New Age India for NRIs. The moment we think of any investments, and that too meaningful investments in any jurisdiction in the world, the first and foremost thing which comes up in anybody's mind is what is the current investing landscape in respect of that particular jurisdiction. So when we are planning to invest anything, as I said, and the word which I used, meaningful, then we need to understand what is the investing landscape. The first and foremost factor where we need to look at evaluating any investing landscape is the growth in that particular economy. When it comes to India, India is in a fantastic growth trajectory. If you look at the Q1, Q2 and Q3 figures, they are around 8% growth, which is just phenomenal. If we compare it with any other economy in the world, then they are completely at the top of the line. And India is the fastest growing economy in the top 20 economies of the world. India, as it is being said, that it is already 75 years that India is independent. And now this 75 years to 100 years, the coming 25 years is the Amrit Kal for India. The reason why we are calling it as an Amrit Kal is for the reason that the dream of all the people in the country and all the people like you who are our fellow Indians but just residing somewhere outside in the world, their dream is that their motherland becomes a developed economy from being a developing economy as of now. Growth just does not mean that it is a place worth investing. The most important thing which we also need to look into is that what is the kind of governance which that economy offers. When it comes to India, the governance in India is strong and stable. We all are aware of so many news which we get around all of us, and by that we can very well understand that the present government and the present ruling dispensation is quite strong and has got deep roots of good governance in India. The reforms in India have been quite constructive on the direct and indirect taxes front, and codes like insolvency and bankruptcy code, which leads to a business environment which is very friendly and completely digital, and people what they have been looking for all these years. The capital markets through which any investments come to India are quite transparent. The public sector undertakings in India, which were a drain on the finances of the government, they are in a perfect shape as of now. The regulators in India are acclaimed to be one of the best regulators when it comes to banking, capital markets, and all other parts of the financial markets. Last but not the least, the judiciary in India needs a lot of mention that it is absolutely, I would use the word absolutely, independent from what a government can influence. And in the recent times, there have been several decisions by the top court of the country which are not liked by the government, but if it is something which is just and something which is in sync with the constitution of the country, they have ruled in favor of those things. And that gives a lot of comfort to anybody from outside who is investing in India. The geopolitical might of our country is quite well known. India has been able to keep best of the relations with both the blocks of the world and still protect its own economic interests. The infrastructure built up in the country, if somebody visits the length and breadth of the country, from all the corners of the country, every other small place to the biggest of the big metros, the growth of infrastructure, the development in respect of infrastructure on road, rail, aviation, every other thing has been just phenomenal. Manufacturing, which in a systematic way in last 20-25 years was wiped out or suffered a lot in India and maybe across the globe, is now returning to India in a big way. Make in India, make for the world, by India are those things which are coming up in India very strongly. And India is emerging as a China plus one offering for offering as a manufacturing base. Manufacturing in India is so very important because services in India have been doing fantastic in all these 15-20 years. But manufacturing was a laggard. And the important thing is that manufacturing can create a lot of blue-collar jobs, and this can make the growth in the country quite inclusive. Exports and capital investments in the private sector in India on account of manufacturing is on a substantive rise. The demographics in India are in a fantastic shape. The way the age profile of the country is quite attractive, that it is a population which can work a lot. At the same time, they could be a population which can boost consumption and thereby boost the economy of the particular country. The country is looking at a major shift from a lot of players who are offering the consumption goods from the unorganized sector to the organized sector. And the preference of Indian consumer is also getting elevated day in, day out on a sustained basis. Digitization in our country, in India, and the financialization of the economy is at a very, very fast pace. UPI transactions in India and the use of internet is something which is very common, and it is amongst the highest in the world. And after a lot of changes, structural changes in terms of whatever the government has been doing, there is a lot of financialization of savings, and the entire economy is becoming more and more savvy, digital, and which is becoming more and more electronic in terms of the transactions which are happening in the country. This is all which I have been talking about, which is so good about India and which makes our country a very important place where somebody would feel that, okay, this is a place to place our investments and our future. But at times, what comes up in the mind also is the fact that what can go wrong insofar as India is concerned. The first and foremost thing which so many of the people who are investing or taking an exposure to India is that if for some reason the present government, which has been doing a lot of good things for the economy in last 10 years, if it does not get elected, then what would happen? But what we feel is that the chances of that happening are absolutely slim, or it tends to zero. The kind of institutional framework the government has done in last 10 years is so important that if for some reason the present government, which has done a lot of good things, is even not in power, which is absolutely unlikely, but even if it is not in power, the institutional framework which has been put to place is very important, and that is quite irreversible. The present leadership, which is being respected highly by the world at large, say for account of age or health or whatever reason, if it is not around, the way they have been delivering in the country in terms of every other parts of the economy, they have raised the bar of expectation of the people at large to such an extent that now here is a country which is at a level where it would not accept any leadership, any government, any ruling dispensation which does not deliver onto their expectations. The another thing which comes up in mind of several investors is that on account of what all things which have been happening in India in all these years, which are good, the valuations of Indian stock market and Indian real estate are at a high level. But let us accept the fact that the moment there is a country, there is a company, or there is a stock market which is offering phenomenal growth, then obviously it would command a premium and the valuations are going to be high. But the way to mitigate this thing or these high valuations is by the way that we can enter into these markets in a graduated manner, in a calibrated manner, by averaging it. So whatever is the kind of investment that somebody is contemplating, it might not be worthwhile, might not be wise to wait for a long period of time sitting on the sidelines, but spread the investment across a period of 20 weeks, 10 weeks, and see that the cost of acquisition of that investment is an average cost of acquisition. One more factor which comes up in people's mind is that what would be the take if there is a bad governance in respect of a particular corporate or a set of corporates in which we have invested. Here, we would say that the kind of regulations which are in place in India and the legal system which is in place in India deters people who are not compliant or not proper in terms of governance. At the same time, there is a lot of information and research available in respect of all the investment avenues, and anybody who is making an exposure to India has got a lot of information as to where to invest, where not to invest if something which is not in sync with the quality of governance. Last but not the least, and the most important thing at times, and which was true before a few years, is that the fear that the depreciation of the Indian rupee. But the statistics which I would like to place before you in the next slide are that in last several years, starting from 2014 to 2024, which is 10 years, the depreciation of the Indian rupee vis-a-vis the foreign currencies has been very limited and quite calibrated. And in the times to come, we expect that this depreciation could be much less, much less than what it has been in the earlier times. And also, there could be a scenario where there could be a certain level of even appreciation. Then, if we look at the figures which we have put forward, that the way the Singapore dollar and the US dollar has depreciated all this time is that from 2016 to 10th March 2024, the way the depreciation has happened in respect of the US dollar and the Singapore dollar is in the around 3%. Now, looking to the kind of returns which the Indian economy is offering, this return is something, or this depreciation of the currency is something which can well take care of it. And if we see the statistics in last 2.5 years, the rupee has practically not depreciated at all. The statistics which is before you, as on 31/12/2022, whatever was the exchange rate equation in respect of both the US dollar and the Singapore dollar, they have remained more or less the same. The reason why we are quite optimistic on the exchange rate front is the first thing being that the inflation in India is now comparable to what it is globally. That is point one. Point two is that there are a lot of fund flows which are expected to come to India by way of participation in the equity markets in India, which are portfolio investments in India, and even foreign direct investments in India. So there would be a lot of inflow of foreign exchange in the country. And one of the reasons why a currency depreciates, as I said, is inflation. Now, if we compare the rates of inflation in whatever it was in 2019 and whatever it is into 2023, we see that in 2019, the rate of inflation in India was 4.80 per annum. In Singapore, it was 0.60. And even in the United States, it was 1.80%. When it comes to 2023, the rate of inflation in US, Singapore, and India is not much different. So this leads us to believe that if there is not a very big disparity in the rate of inflation between India and its counterparts, then the reason for depreciation of the rupee would not remain. As a culmination of whatever I have been talking about, good about India, and that is what is reflected in the way the stock markets have been performing in last 1 year. If we compare the performance of the major stock markets in the world, top 20 economies plus Singapore, India, the Sensex, which is the large cap benchmark, which has appreciated substantially, but the mid cap and the small cap parts of the stock market, they have done just phenomenal. And they are comparable, or they are the best parts of the markets which are there anywhere in the world. When we compare it with several developed economies of the world, India is doing phenomenal and quite outpacing or outclassing the different investment opportunities which are available through the route of stock market anywhere in the world. Now, I would take up one interesting development which has happened in India in terms of the opportunities which the GIFT City is offering. Now, basically, what is the GIFT City? GIFT City is a notified geographical area in India in the state of Gujarat near the city of Gandhinagar, which has been notified as an international financial services center by India. Now, the advantage of this being notified as an IFSC is that the exchange control regulation and what we call in India the law in respect of exchange control regulation, which is Foreign Exchange Management Act, that does not apply in this area of the GIFT City, which is IFSC zone. The exchange control regulations of India do not apply in this zone. But the laws in respect of income tax and other laws like the company law, the laws relating to contracts, trust, and every other law do apply as it is applicable anywhere in India. But under the Income Tax Act, there are several exemptions which have been given for activities or products or investment products which are rolled out of the GIFT City. The GIFT City platform is for financial services. It is not for any manufacturing or trading services. Financial services, by which I would mean asset management, banking, insurance, and anything which is related to capital markets. And all those activities which are started in this special economic zone, carved out special economic zone, are treated differently insofar as the regulatory part is concerned. Alongside this special economic zone, there is also a domestic tariff area to serve this special economic zone. The dream of the government is that all the funds, all the monies, and all the transactions which are going in tax-friendly and regulatory-friendly jurisdictions like maybe a Singapore or a Dubai or maybe a Hong Kong, those transactions eventually should come to India and they need not go out anywhere in other jurisdictions. Coming once again back to what the GIFT City offers, one of the difficulties which so many of the people who are coming from outside, they face in India is that they need to go to several regulators for different kinds of approval. When it comes to the GIFT City, there is a unified authority, which is International Financial Services Center Authority, which is one authority which takes care of all the regulatory parts, which might be banking, capital market, and all other parts of the financial markets. One of the offerings of the GIFT City, which would in times to come attract a very, very huge amount of fund flows in the GIFT City, is the FIF regulation. Under the FIF regulation, family offices can be established in the GIFT City, and it could be the funds of the family or its entities. The minimum corpus that would be required would be 10 million US dollars, which is around 83 crores of Indian rupees, and that needs to be deployed across a period of 3 years' time. And the investments can be in listed, unlisted assets in India and outside of India. The FIF can also leverage these investments, and the the good part, or something which is the most attractive part, is that all the incomes in respect of this entity, which is the FIF, Family Investment Fund, would be completely tax free for 10 years out of the 15 years. And that is going to be a major attraction for so many of the family offices to set up their entities in India. They will have concessions on certain indirect taxes also in India. And this is not all that is in respect of the gift city. This is an offering for big time family offices, but even for retail investors or smaller investors, there are offerings which can be quite advantageous from regulatory and taxation standpoint. With these words, I hand over the next part of the presentation to CA Rajit Kothari to take it forward. Thank you.
Very good morning to one and all present here. After going through the entire overview of the gift city, let us understand what are the opportunities for someone to participate and make the most in terms of financial investments out of this opportunity. There is a very interesting opportunity by investing through a concept of alternative investment funds for NRIs via the gift city, wherein if we understand the entire process, in the first step, the amount of investment can be directly remitted by NRIs residing in Singapore to the gift city without involving the Indian banking channels. These AIFs work in a feeder fund kind of a structure, wherein these funds are in turn invested into Indian mutual funds, which would invest into the equity markets by way of dealing in equity shares. Now, these gains, whatever arise out of the sale of units of these AIFs, will be completely tax-free in the hands of the NRI investors, because the AIF is registered and is operating from this special economic zone of the gift city. Thereafter, the funds can be ultimately repatriated along with all the gains in a completely tax-free and a seamless manner back to the home jurisdiction of Singapore. Looking at the advantages of this entire working, the first and the foremost advantage is that all these investments are in the terms of USD. And there is a very paperless, convenient mode of onboarding through the KYC without any kind of major hassles. Secondly, there is no involvement of any kind of banking channel in India or any demat depository account in India. The funds can directly flow back and forth from Singapore to the gift city. And naturally, as we understood, that there is no tax implication on these kinds of investments by way of participating in the equity market, which makes it very attractive for people residing in Singapore, because there is no capital gains in Singapore on account of foreign investment gains. Now, let us move further with the avenues of participating in this new age India by way of investing in the Indian financial markets. We all understand as to what are equity mutual funds and how do they work in India. But today, what I want to discuss is some other factors regarding equity mutual funds, which we might not have come in the past. Now, entire India has accepted that equity mutual funds are the most convenient, simple, and cost-effective ways of participating in the India growth story, which is why they have crossed a total valuation of more than 52 lakh crore rupees. However, through the various investors that we come across in our interactions on a day-in, day-out basis, a lot of them invest on an ad hoc or a random basis by way of investing into several in an unstructured manner by way of participating in NFOs or randomly investing. However, an ideal mutual fund portfolio should be designed keeping in mind all these parameters which we have mentioned, which is the financial profile of the investor, the kind of risk that suits the particular category of investor, and of course, the kind of goals with which those investments have been made. There is an entire bouquet of various categories of investments into mutual funds, into all these different kinds of categories that we have mentioned, which is a large and mid, flexi, multi, mid, small, and an appropriate bifurcation and allocation into all these schemes, all these categories of schemes is extremely important to have a robust portfolio which performs at all different cycles of the market. Similarly, it is also important to have an appropriate level of bifurcation across different asset management companies, and the comparison on a regular systematic basis with the quartile as well as the relevant benchmark is utmost necessary to ensure that the mutual fund portfolio is dynamic and continuously outperforming the benchmark. A very interesting way of investing, especially for Singapore-based NRIs, by which the entire gains practically on these mutual funds become tax-free, is something which we would like to discuss. Not many people, NRIs residing in Singapore, are aware of this way of working. Let's go step by step. In the first place, the Singapore-based NRIs can invest in the equity mutual funds or non-equity based mutual funds, and to avail this kind of a benefit, the NRI has to be a Singapore tax resident, which is either a national or a permanent resident holder, or who has stayed for a certain number of period in the preceding tax year, which is the calendar year in Singapore. Whenever these sale arises of these mutual funds, then there is a withholding tax which the asset management company normally deducts. However, if the Singapore tax resident has obtained a TRC from the Tax Authority of Singapore, which is the IRAS, and it is submitted to the Income Tax Department along with the Form 10F, which is a normal declaration, and the return of income is filed in India on a timely manner, in which this benefit, which is laid down under the double taxation avoidance agreement between India and Singapore, is appropriately mentioned, by then the entire gains on these mutual fund investments to the NRI based out of Singapore is completely refundable. And thereafter, it's a simple process, and it's not just something which is mentioned in the DTAA, but it has also been reaffirmed by judicial pronouncements, which we have mentioned in this slide. Moving further, another interesting opportunity of investing in the new age India is by investing in a portfolio management service offering, which is as such a portfolio of equity shares managed by a particular fund manager, a particular portfolio manager that is selected by the investor. Now, within that portfolio manager, there can be multiple strategies which can be bifurcated and selected by the investor, which could be a multi-cap kind of a strategy, or small, mid, or any theme-based kind of investment that someone can opt for. Looking at the advantage of this PMS over a mutual fund is that, firstly, this PMS is a distinct portfolio of shares held in the name of the investor under the ownership of the investor in a distinct demat account with the rights of management, fund management given to the portfolio manager. So what happens is that there are a limited number of regulatory restrictions as compared to the mutual fund, which the portfolio manager gets a freedom of. In terms of several sectoral caps, stock specific caps, which are not as much as what they are in the mutual fund, which is why the portfolio of these equity shares can be much concentrated as compared to a diversified portfolio of a mutual fund. Secondly, the inflow and outflow of other investors does not impact the entire portfolio of PMS. As I mentioned, that it is a distinct portfolio. While in case of a mutual fund, since it is a pool of investments of all kinds of investors investing all amounts in different capacities, the entire inflow outflow can have an impact to the entire basket of investors, which is not the case of someone investing through a PMS. The minimum ticket size as per the regulatory requirements in a PMS is 50 lakhs of rupees, but that amount can be bifurcated into different strategies managed by the same portfolio manager. The opportunities that we discussed so far are investing in the India growth story in the listed space, the companies which are listed on the stock exchange. Now, let us look at the options of investing into the unlisted space or the alternate space by investing through companies which are pre-IPO companies, which have not yet approached the market, or which are kind of promising startups. Firstly, let's understand as to what is the rationale of investing into these kinds of companies. It's quite simple: to take the early mover advantage, to catch them young. The valuations at which these kinds of companies are as such available for investment is very attractive, because these companies are not available to the public at large, or rather the public at large is not aware about these kinds of opportunities. And when these companies approach the financial markets to go for an IPO, there is a huge amount of demand, not just from retail investors, but from several financial institutions within India and outside India, which raises the demand to the next level, which leads to a humongous price appreciation in these kinds of stocks by way of listing gains, which is why the returns from these kinds of investments could be multi-bagger, which can be measured in terms of 5x, 7x, so on and so forth. It's quite obvious that when these companies come for the IPO, then the success story becomes visible to the public at large. And thereafter, this kind of a multi-bagger return opportunity may not remain. There are several unlisted equity shares which are available for investment of public limited companies. However, certain parameters are key to selecting these kinds of offerings, which is the first and foremost the promoter which is backing the company, which should preferably be a reputed business group, a conglomerate. The track record in terms of the financial performance that this company has delivered across the year, with hopefully a consistent growth in terms of the top line as well as bottom line, is extremely important. The business should be something which is futuristic, which has got a lot of potential in the times to come, then something which is a sunset kind of a industry, which does not have much future visibility. There should be some kind of competitive advantage which that business holds, so that it has some kind of a extraordinary or supernormal profits in the long term. And naturally, once we are investing and looking for some kind of multi-bagger return, the clear-cut visibility of IPO should be there to have some kind of value unlocking from these investments. And in case if the IPO gets delayed by the company for whatever reasons which is beyond our control, then there should be comfort in holding these kinds of investments for comparatively longer tenures. I would like to take this opportunity of discussing one of the interesting case study of a company which went for the IPO few months back, which is Tata Technologies Limited. Now, this company was available in the unlisted space since last few years, and our investors have been investing into this company since February of 2021, when the price was 1,000, 1,500, 1,600 odd rupees. And thereafter, if we evaluate the entire journey, then after a significant appreciation in the unlisted space for these kinds of shares, it went for a bonus followed by a split issue last year, followed by a listing last November. And if we evaluate and summarize the entire journey, then one share of 1,575 rupees, that one investment, would have lead to a valuation of, or is at a valuation of 10,460 rupees, which is 7x in 3 years, which is 88% compounded growth. This is the kind of returns and the kind of opportunities that are there in the unlisted space today. And there are several such companies just as Tata Technologies Limited, which are available today for investment. To start with is the National Stock Exchange, which is a kind of a monopolistic business, and the stock exchange, the stock exchange which holds lion's share of the kind of trading volumes in India, which is not just the India's largest stock exchange, but even the world's amongst the largest and the most profitable stock exchanges. Tata Capital Limited is also another NBFC of the Tata Group, which is also likely to go for the IPO in the near future and amongst the largest NBFCs in India. SBI Mutual Fund is the largest asset management company in India. And these two HDFC Group companies are also very promising, which is the broking arm of HDFC Group, HDFC Securities, and another NBFC of the HDFC Group. We can share detailed analysis on all these companies by way of the kind of future prospects, comparison with the peers, valuation analysis, if anyone is interested to explore further. When it comes to investing in certain unlisted companies, which are not backed by reputed promoters or which are rather in the initial stage, in the early and the mid stage of investment, then there are two challenges which any investor encounters, which is number one, identification of these kinds of startups or companies, because there are several complex parameters, which is the business, future, promoters, so on and so forth, which are quite complex to understand for any investor who is not aware about these kinds of opportunities. And second is the valuation at which these companies are available for investment, because it might so happen that the valuation could be a deceptive and the investor might not end up earning substantial return if there is no intermediary, no advisory involved in between. So the solution to both these issues is investing through an alternative investment fund, which is a very structured way of investing by a professional fund management into unlisted stocks. Now, these unlisted stocks where the AIF invests could be at all different stages. It could be an early stage startup, a mid stage company, or a late stage pre-IPO kind of offering. The advantage of investing through AIF is that it is backed by a fund manager who is highly experienced and is very well connected in the entire ecosystem of investing in the unlisted space, which solves both the concerns that we discussed. Is number one, promising, is finding good quality promising ideas, and number two, identifying the valuations by adopting several globally renowned valuation principles, which assure a certain kind of return whenever there is value unlocking from these kinds of investments. The minimum ticket size of investing into this is 1 year. Minimum is 1 crore rupees, and the time period is 5 to 7 years. The amount of 1 crore is payable in different tranches, and of late there have also been offerings into AIFs which invest into listed stocks. Now, someone would think as to what is the point of investing into listed stocks through the route of AIFs when there are mutual funds and PMS which are already available. Now, the reason behind this is that this AIFs work are category 3 AIFs, which is why the entire taxation and compliance burden lies on the shoulder of the fund rather than the investor. So it's the responsibility of the fund to discharge all the kinds of taxes which arise on account of gains and ensure compliances of whatever are the investment incomes arising to the investor. And it's just as a mutual fund. And since the AIF has already discharged the kind of taxes which are as such applicable, so it is not taxable in the hands of the investor. This is the entire summary of all the different options that we discussed so far for someone to participate in the India growth story by way of investing into one or the other investment vehicle. We have also outlined the minimum ticket size for investing into these options, along with the kind of liquidity which is available because at times there is a lock-in kind of a structure which is available in the alternate investment options, and the kind of bank and the demat account which are required in each of the cases, along with the time horizon which is ideally recommended to generate the kind of returns that we are looking for in these kinds of investments. At this point, I would like to pause for a moment and ask you a question by way of a poll as to what are the different kinds of challenges or deterrents that you as NRIs from Singapore face in terms of investment. I would request everyone to participate by way of voting so that we can have some kind of meaningful conversation. We can help you address your concerns in an effective manner. Fine. Can we have the results? Yes. So, yeah. So far, the major deterrent that we have encountered out of the various options which we thought someone would come across is the taxation and regulatory compliance, which is a fair point because not we from our interactions from so many of the NRIs from Singapore and across the world, there is a major kind of misconception, misunderstanding that a lot of people have in their mind. So, by way of furtherance in this presentation, as well as series of other presentation, we would like to clarify on each of these misconception, whatever is there, so that the entire framework of investing and ensuring taxation and compliance burden in discharging rather taxation and compliance responsibilities is clear in the minds of all the investors. And with the advent of technology and the reforms of the government, especially in the last decade, the entire tax machinery now has gone for a sea change and has become completely digital and faceless and very efficient these days. So gone are those days when taxation and regulation was a major concern in India and there was a lot of bureaucracy. The entire system has now changed, which we'll discuss further as to how can someone not have that as a deterrent in the times to come and mitigate it and participate in the India growth story. Moving further, we all understand that it is not ideal to keep all eggs in one basket, and diversification across different kinds of markets, different kinds of currency is definitely required, which is why we also have a platform for investing directly into the US market for Singapore based NRIs, which is by way of investing into direct stocks or ETFs of someone's choice in the US market, or stock portfolios that we have customized and curated for the investor by our platform, which is mentioned in the slide. Our broking partner in the US is Trival, custodian partner is Citibank. The advantage in terms of the cost aspect of using this platform is that there is no brokerage, no hidden kind of charges. There is one fixed fee of 1% on the entire portfolio value, which is why it gives a lot of flexibility for someone to trade back and forth and have any kind of exposure that someone is looking at. The entire funds of can be remitted directly from Singapore to USA and vice versa in this kind of offering using our platform. There is no involvement of India as such in this entire process. And because of that, there are no tax implications as such, which are there, which will arise in India out of using this platform, since the country of residence is Singapore, in which there is no tax incidence on foreign capital gains, and US also does not have any kind of taxation on capital gains from overseas investors. This is the entire snapshot of the kind of platform that we have developed, which is very seamless and gives a very nice user interface for someone to evaluate the portfolio and enter into any kind of transaction and have an exposure into the entire US market universe. These are some sample portfolios that we have curated for our investors. which could be into different kinds of themes, such as EV, which is emerging, or the popular big tech bank stocks, or some other kind of themes which are beyond all these stocks. Moat, which is companies which have got some kind of competitive advantage, certain tech-based portfolios, and certain companies which are either US facing or global facing. Moving further, repatriation is another concern for NRIs, and we have seen that there is a lot of confusion with respect to that. This is an entire summarization of the repatriation process that some NRI from Singapore has to follow while taking exposure into all these different kinds of investment avenues which are available. When it comes to the listed space by way of investing through a mutual fund, PMS, equity shares, or AIFs, the funds can flow directly from either the NRE account or the NRO account. Just to clarify, NRE account is a repatriable account wherein funds can directly move from Singapore to India and vice versa, whereas NRO is a non-repatriable account and funds cannot directly move without a certain procedure from the NRO account to outside India. So if the investments are routed from the NRE account, which is a repatriable account and which is advisable since the funds become repatriable, then there is an international bank transfer and any amounts of money can be repatriated back and forth anytime. When the amounts are invested from the NRO bank account, then there is a procedure which has to be undergone, which involves a CA certification, and amounts to the extent of $1 million per person per Indian financial year can be transferred from the NRO account to outside India or to NRE account and then outside India. When it comes to investing into real estate property, then the funds might be remitted and invested through either of the two accounts, which is NRO and NRE. However, the funds on the sale or disposal of the property will back to the NRO account, and thereafter we'll have to undergo this process of transferring the funds to a certification to this extent of limit which I discussed earlier. When it comes to investing into the alternate space, which is the unlisted investments, similarly, just as a real estate transaction, investments can flow from either of the two accounts. However, when there is the redemption or the disposal of these investments, then it would flow to the NRO bank account, after which the investor will have to go through this procedure, which we can very well coordinate and help the investor, and thereafter it can flow back to Singapore. Another major interest for NRIs from across the world in the India growth story is investing into real estate as a sector. Real estate might seem to be very attractive for people, considering the kind of conversations that someone could have who is with someone who is residing in India. But there are certain aspects which we always need to keep in mind when we are meaningfully investing something in the real estate space. Real estate investment, which can be into a land or a constructed real estate, may undergo a kind of steep appreciation if that locality in that particular city is developing for a certain time. However, since now the entire geography of every city in India is developing, then what normally tends to happen is that after this time of steep appreciation, which could be for some time, the entire appreciation stagnates for a significant period of time, which is because the entire development of that city might have migrated to a different place. So what happens is that if we have purchased some kind of real estate property, it might undergo a steep appreciation, but then it leads to a significant time correction by way of stagnation for a lot of time, which is why the long-term returns are not that attractive at times and subside over time. Also, it is important to note that liquidity, as we are aware, in real estate is a challenge, and managing real estate for someone who is not predominantly residing in India is a major concern. The entire process of investing, disinvesting, and remitting those monies back outside India is all possible and, and completely compliant and legal in India. But it involves a lot of time and efforts that someone might have to invest. What we have often observed from NRIs who are residing in the developed markets, including Singapore, is that the next generation is not willing to structurally move to India, which is why they may not be keen to inherit and liquidate and undergo this entire process which is involved in real estate transaction. However, real estate for self-use is something that someone can think for, or if someone is intending to relocate back to India at a later date. But overall, considering all these aspects, what our analysis is that financial assets, which are much more convenient, liquid, and are set to go for a very good appreciation, which we discussed earlier in the presentation, are a much better way of investing meaningfully than a real estate option. Now, I would like to discuss something about our setup and how we operate basically. So we have a legacy which is more than 65 years into this particular field, and we are a one-stop solution for anything that an NRI can think with respect to his or her financial affairs in India, which is not just investments, but also all kinds of income tax compliances, exchange control regulations, advisory with respect to Indian inheritance laws, and and everything that encompasses the financial landscape. We also have an entire dedicated team of experts, right from NRI relationship managers who are there 24/7 to address the needs of the clients, and the backend team, which has got the entire knowledge base of addressing the Indian diaspora for all their financial requirements in India. We have our active physical offices at all these three locations, which is Mumbai, Ahmedabad, and Rajkot. And we manage an asset book of more than 700 crore rupees, which is invested into various asset classes, predominantly into the equity markets in India as well as outside India, serving more than around 3,500 families. And this client base of ours is spread across practically the entire globe. We have got our representatives as well who are outside India in several parts of the world, along with a team of more than 60 people in various different kinds of functions in India. This is just a glimpse of our upcoming corporate house in India. And if any one of you happens to visit any of these locations, which is either Mumbai, Ahmedabad, or Rajkot, and it would be our pleasure to meet you in person and to take this opportunity of working together for the entire financial planning universe. Let me also introduce our representatives who are based out of Singapore. We have Ms. Ayushi Kothari and Mr. Daxesh Kothari, who are very much in the Singapore system since a long time. And we have also mentioned their contact number. They are always there to support you for any kind of need that may arise. They can meet you in person. And even we are planning to have a physical event so that we can meet you in person in the near future. The second webinar that we have planned for this series is on the 6th of April. And we would like to know what is your subject interest as far as this topic of the second webinar is concerned. So kindly, we are starting another poll right now. So kindly submit the topic that you would like to have in our second session so that we can plan further. I think we are done now. So what I can see is that the maximum interest is into understanding of opportunities of investing into the gift city, which is definitely something which we can look forward to, and can also try to involve certain industry experts who are there in the gift city ecosystem so that we can have a better and more value additive kind of conversations further. This brings us to the end of the presentation. This is a general disclaimer that all the views that were discussed so far in the presentation are our personal views, and we do not intend to give any professional investment advice through this webinar. Wherever we have used any kind of references, then we have mentioned the appropriate source of that particular data. Thank you so much to all the participants to make it here today on this Saturday morning. And we look forward to have many more such interactive kind of conversations before we end and break for the question answer session. And if you have got any kind of questions, then please feel to either put it in the chat box, or we can have a one-on-one interaction right now as well.
Hello. Thank you, Mr. Daxesh Kothari and Mr. Rajit Kothari for the wonderful presentation. Let's just take some questions from the chat box, and I will start with some questions through Mr. H. Thakkar, and he has mentioned that he is very much bullish on Indian growth story, and he would like to understand that based on the recent incident by the comment by the SEBI on the mid cap and small cap stocks. So, what we think on this particular statement, and how the Indian market can perform in future for the next, say, period of 3-5 years.
Am I audible?
Yes, sir.
Yeah. Okay. At the outset, before going to this question per se, what was the findings in the poll? I just wanted to have a little word on that. The finding of the poll was that one of the concerns insofar as investing in India was that the taxation, the regulatory part, right? I would like to address it in two ways. One is the procedural part, and insofar as the procedural part is concerned, as Rajit said, and I would just detail it out, that all filings in India when it comes to taxation are completely digital, right? All processing is digital. All kinds of interaction with the Indian tax authorities are completely faceless. All appeals, everything is completely faceless. Gone are the days that one need to go to the offices, coordinate, meet people, and when you meet somebody, you understand what can happen. But these are the times where all these things are completely digital. And this has happened in last 3 years. So this is very noteworthy. So this is insofar as the procedural part is concerned. When it comes to the extent and outgo of taxes, when it comes to somebody who's investing from Singapore, they have got a very nicely crafted DTAA in their favor, that several incomes are tax-free. Now, even if there is a particular income which is taxable, what we always discuss and the view that we hold when we interact with non-resident Indians is that even if you need to pay a certain amount of tax, what one needs to look into is that what is the net of tax that I can generate across the globe. There are so many jurisdictions which are quite attractive, which is taxable. But at the end of the day, what is the net of tax return? That is what is important. And when it comes to India, it offers a fantastic opportunity. Now, coming to the question proper, the way we would look at is that this is the way the country's regulator are so agile on something which has not happened, but which can happen, and everybody who is taking a call of investing into mid-cap and small-cap kind of stocks, which has offered excellent investment returns, they need to also understand the risk profile or the volatility profile to be particular about in investing into mid-cap and small-cap stocks. So this is in fact a welcome move that everybody who is investing, yes, they have generated fantastic returns, and we hold the view that the future growth engine in terms of a particular portfolio of investment in India would be into mid cap and small cap stocks, and that would create that outperformance when it comes to India. So this is a welcome move, and this shows the agility of the regulator. Thank you.
And Mr. Thakkar also wants to understand the capital gain tax advantage while investing into AIF comparing to mutual fund. And he also wanted to understand that is there any tax limit which is applicable to investments in AIF?
Okay, please, Rajit.
So basically, this AIF works with a feeder fund kind of a structure, which is a fund of fund kind of arrangement, wherein all the investments are made into the AIF, which invests into the Indian mutual funds, which would then invest into the Indian stock market, the financial markets, and all the gains that arise to the AIF by way of the sale and purchase of the mutual fund units, as well as the gains that arise to the investor by way of dealing in the units of the AIF per se. At both these levels, it is completely tax-free in the hands of the investor because of the special arrangement of certain kind of exemptions which are given to the registered AIFs in the GIFT City zone. So as such, it is completely tax-free from for the investor in both these cases. And as far as the minimum amount goes, then it is 1 crore rupees for investing into AIFs, and there is no maximum cap for investing into these kinds of options. So any gains to any extent through this kind of a route is completely tax-free for an investor who is as such a non-resident and situated outside India under the income tax.
Okay, thank you. Now, in continuation to AIF, Mr. Tejas wants to understand the lock-in period which is there in the investments in AIF.
As far as these AIFs of the GIFT City are concerned, they are still in the verge of getting launched. So we might not be able to comment on the specifics of each of the case as far as the locking are concerned. The general overview that we can give is that the locking kind of a structure will not be there. There could be some kind of discouragement by way of imposition of few exit loads, which is to ensure that the investor stays for a certain period of time invested into these kinds of options, which could be for a period of 1 year or beyond 1 year. We would be better equipped to discuss that in the next session, since this is still in the very initial nascent stage. And hopefully by the end of this month or early next month, we can expect that it would be full-fledged operational, which is after which we will be able to comment on the specifics. But just to give a broad outline, the lock-in kind of structure, especially in these kinds of AIFs, according to us, will not be there. For the other AIFs, which are investing into the unlisted universe, the startups and the pre-IPO, yes, there is a lock-in structure for a certain number of years, because the kind of cycle which it works, these investments, they are destined for a certain period of time.
Okay. Now, I'm here with the last question for this session, and if anybody from the participant wish to directly interact with the speakers, then they can raise their hands from the application, and then we will unmute them to start interacting. My last question is from Mr. Dheeraj Balani, and he wished to understand the taxation for investments into portfolio management scheme.
As far as portfolio management services are concerned, they are as such equity shares which are held under the ownership of the particular investor. The only thing is that this demat account in which these equity shares are held is managed on a dynamic basis by the particular asset management company and its portfolio manager. So the tax implication arising is same as what happens by way of dealing in equity shares, which is a rate of 15% is applicable on the short-term capital gains when the holding period of the investment is less than 1 year, and beyond a holding period of 1 year, there is an exemption of 1 lakh of rupees on the long-term capital gains per investor, beyond which all the gains beyond 1 lakh 10%. And the dividends arising from these shares are taxable at a flat rate of 20% for all the non-resident investors.
Okay, thanks. Now, I have seen that in the chat, a lot of discussions are going on with regards to AIFs. So I think there are all big time senior investors who are interested to start taking participation. But I would also like to highlight that we are equally interested for helping young investors there in Singapore with regards to starting the investments into mutual funds and PMS as well. Well, this is it. We are end to this webinar, and we especially thanks to the supporters there in Singapore and the participants who have contributed their time in this weekend. So thank you, and we are hoping to see you again next month on 6th of April.
Yeah.
Can we also have the feedback form?
Yes, I have shared the same. I've shared the link in the chat box. Request the participant to kindly help us with your feedback form. Kindly help us to give your feedback so that we can improve ourselves further on, and so that it keeps us motivated to coming up with all these initiatives or knowledge sharing sessions for you.
Special thanks to all the participants for sparing their valuable weekend for these kinds of exercises. And a special thanks to Mr. Dipesh and Ayushi Kothari, our representatives in Singapore.
I think we have got one question, so we can pick that up.
So the form on the chat will help us with next steps. So if you need a one-on-one session with Rajit and Daxesh, or if you need help with some basic questions on how do I get started with my account setup, I think we can figure out who would be the right person based on the form that we have put there, and then we'll help you with your follow-ups from there on. We can wrap up here then if there are no more questions. Premji, you want to do that?
Yeah, sure. Okay, thank you so much. Hoping to see you soon next month. Bye-bye.
Thank you.
Thank you.
Bye.
Thanks.